and welcome to the NC podcast. My name is Natasha Collins and I am the host of NC Real Estate, which includes its members club for landlords and property investors to come and build a profitable property portfolio that completely aligns with their goals. Let me let you into something. This week, the members club doors are open. So if you want to be a part of my members club, then you need to go to www.ncrealestatemembersclub.com. I am going to put the link to that below. That again, this week only. The doors are only open until the 20th of November, and then that's it. We're closed for the year. So if you want to be a member in my members club, you're going to have to click the link www.ncrealestatemembersclub.com to join now. Okay, today I have somebody really exciting on my podcast. I have got Greg Hunt. We know each other through working on the commercial property management modules together at UCM. Hi, Greg. How are you doing?
Really well, thank you. Yeah, all good.
So, as I've just said, we work together, don't we, on the property management modules. We have just, at the time of this going out, we will have just finished marking. So then we're on to exam time and into Christmas. Greg, you also examine on the APC?
I do. I've literally just finished chairing for the Royal Institution of Chartered Surveyors. And we were at a football ground doing interviews recently. Yeah.
A football ground?
Yeah, we were at the Villa Park Stadium.
That's where they hire.
Yeah, it was really good. I was trying not to be distracted by the view of the football pitch. It's a serious process, but no, it's really good to be involved in the assessment of professional competence process and doing the hour interviews for candidates. Yeah.
I bet that's really rewarding. I've never got as far as being on the panels. I have a couple of candidates who I mentor, but that's about as far as I've gone with it.
It's intriguing. It's great. It's wonderful to be able to bring out the best in people and, ensure that standards are upheld for the profession. And it's really interesting seeing people come through and develop. So I love being a part of it.
And as well as that, of course, you're a surveyor and you work for Clem Dodson Associates.
Yeah, it's a property management niche. There are 8 of us in the Clem Dodson Associates team and really enjoying it. We literally focus on the management. We're able to concentrate on that. We're able to bring in a whole host of consultants and other experts to cover the whole array that is required in respective commercial property. But as I say, it's good to be able to focus on the property management element and then bring in best placed individuals to really make a difference in the whole arena of the property world.
So how did you get to where you are now in your career?
Okay, after finishing school, I didn't know what to do, so I did a geography degree.
Same with me.
There we go. And after a good year of colouring in, I did another 2 years in terms of seriously honing my just degree skills. Mine was a BA Hons geography degree. And after that 3-year course, I could have done anything. So I had work experience with a lawyer, with a planner, with a farmer, etc. But the surveyor was really interesting, and he piqued my interest in terms of the variety of work, no 2 days being the same, and getting involved with property. So I did a 1-year full-time MSc Masters at University of Reading. Reading University, and that was my MSc in land management. A really intensive year, yet ultimately extremely rewarding, and it covered all the areas that you'd expect in terms of property law, construction, valuation, planning, and investment. Then after my MSc, we had a whole array of property consultants and client-side companies come and visit us, and they sold their wares, so to speak. They were keen to pick the best, so they didn't pick myself initially. No, I joke. But they all came along, and it was really good to hear what was important for them in terms of the best candidates, etc., who they were looking for. I joined a company called Slough Estates PLC at the time. They're now called Segro. They were the largest industrial landlord in Europe, and they're still pretty active in terms of industrial portfolios. And I joined their graduate training scheme, and I was with them for over 5 years. They actually built out the Slough Trading Estate, and it's the first power station in the world for the Mars factory back in just before the Second World War. So that was my background and my experience, and a good industrial production warehouse and business properties, and they thrived on that. They still do really, really well on that. I then moved on to experience with property consultancies in the UK, Donaldson's, Jones Lang LaSalle, and CBRE. But I had really good experience that was different to having been client side, where Slough Estates owned the estates and the property, and mainly industrial property. And at Donaldson's, for instance, I acted on behalf of WH Smith and Barclays. So two really fast-moving retailers. It was vital for them that the retail could always flourish. The property was obviously second string to their core business. And as far as they're concerned, everything just needed to take place so that their retail shop front could flourish and they could earn money. So really fast moving, huge programs for alterations, for adding value, for getting rid of vacant space. And we were looking at the whole array of saving money and trying to add value. And I think that's such a critical area, whether it's residential or commercial. It's all about saving money and adding value. Jones Lang LaSalle, I acted on behalf of insurance and pension companies. People may have heard of them, but LaSalle Investment Management hold a number of funds who decide to put a percentage of their money into property. They put that percent mainly into commercial property, and they obviously need property managers. So we were there ensuring there was no risk with regard to the properties in these funds. You would have funds that consisted of garden centres. You would have funds that would consist of the glossiest, largest multi-let office properties in the big cities. A really, really good mix. And then because of that, I was actually headhunted by CBRE, and I was asked to do the same and lead the Birmingham team at CBRE for CBRE Global Investors. So I was doing exactly the same at CBRE, but it was for CBRE Global Investors. And we acted on behalf of 21 out of their 24 funds for the likes of people like Shell. So your workers at Shell, Petroleum, they put all their money aside in their pension. That's proportion of that's going into property, commercial property world, and you've got the property managers acting on their behalf. They had a number of leisure sites, cinemas and retail. They had industrial estates. They had office properties. They had retail parades. You name it, shopping centres. They had it. So it's great experience, and we had the whole array of issues, as you can imagine, as a result. Briefly, I had an opportunity about 2 years before I left CBRE, whereby it was said to me we needed to make the whole position more profitable. we need to ensure that our EBITDA, earnings before depreciation, tax, and all the rest of it, was as high as possible. And therefore, those clients that had individual assets, or we thought we couldn't get more new business from them, or we couldn't cross-sell to other departments, let's get rid of them and let's focus on new business where we can really add value and make a lot more money. So this was called tail end work, and I thought, right, okay, this is my opportunity. So I agreed with CBRE that I could manage all the tail end work, and ultimately I was able to take it wherever I wanted. So this has been great. All those clients are still with me. I've got some really fascinating properties, and we're growing the portfolios with those clients and trying to create a trusted position over time, and trying to add value and save money for those clients. And that's what I'm doing now. We're growing the portfolios of those clients. I've taken on a few new clients, and really trying to spot some opportunities and get the best position for them. So that's my background.
So exciting. Such a varied career, but it kind of all adds up looking forward to where you are now. So you specialise mainly in commercial. So what are the benefits of investing in commercial property?
I think your attitude to risk is critical in life, in investment, in what sort of character type you are. And whatever character type you are, whatever your attitude to risk, there's an opportunity for you. And if you have got a really, really safe attitude to risk, then in commercial property, there could be the investment for you, but you might not be looking at such a high return. If you're a bit of a risk taker, fine. You might be looking at a void, you might be looking at dodgy covenant strength, you might be looking at occupiers who they're not even sure what they're doing. So how are you going to know whether they're going to be ultimately successful or not? But potentially the yields, it could be incredible, and it could be an amazing return. Normally the investments are priced accordingly. But if you're ultimately really, really safe, you're not prepared to take any risks in life, you're going to go with bonds, okay, in terms of your investments. If you're an incredible risk taker, but ultimately you don't want your money to really, really work for you, let it do its own thing, you might look at equities. But in terms of commercial property, hands-on approach, or give it to a skilled property manager, and there are ultimately amazing rewards to be had. Why commercial property? Because I would argue the ad hoc income potential and the potential risk reward. So there's a lot of rewards that you cannot have with regard to bonds, you cannot have with regard to equities. If you're prepared to be hands-on directly, or if you're prepared for a property manager to be hands-on for you, but you give them a strategy of what you ultimately want to achieve, commercial property is your answer.
Okay, well, yeah. Commercial property is the most strategic type of property. I always get super excited about talking about this stuff because there's so many different things that you can do. And Greg, just quickly to clarify, why do we look at covenant strength?
So income is your value, and certainty and security of income is ultimately giving you your valuation on your property and what mortgage or what you could borrow against the property. So in different parts of the world, obviously income and covenant strength is talked about in different ways. In the UK, we'll call it grade A covenant strengths. And there are loads of different platforms that monitor it, whether it's Experian or Dun & Bradstreet or anything like that. However, ultimately, if you can pretty much guarantee that a company is going to stay, they're going to be good for the money, you've got a secure return on your investment, and you can obviously use that to further invest, or you can use that to expand and grow your existing property portfolio. So income's critical, and the security of that income, hand on hand, vital.
Okay, great. So for people who are listening, that's what you are going to be looking at. Covenant strength is really important for the investment value of commercial property. So then, now let me ask, where do you see the best returns at the moment?
This is an ultimate question. So, can we get our crystal balls out and predict the future? No. However, so this is my without prejudice comments. So I get my crystal ball out, 2019, 2023. I am of the view that we would look at industrial is our superstar return game changer. But not all industrial, all industrial, the right industrial. Okay. These are general comments. Industrial, then office, then retail warehouse, then retail. Bottom of the list for me, shopping centres.
Oh,
there we go.
Do you know,
controversial?
It's controversial, but I don't know if you are like me in that I always rummage through the auction catalogues. Commercial auction catalogues are like my thing. Every time I see one come up, I can see that they're bottom of the pile for a lot of investors who are offloading at the moment, because they are coming to auction with some ridiculous gross yields. I saw one that sold actually in Scotland for a 53% gross initial yield.
There are some incredible retail opportunities for the right savvy investors who have got an extremely high risk return profile. They've got cash, ideally. They've got proof of funds. They're in a position to take a gamble. They could do quite well. In terms of covenant strength, and everybody we're seeing having difficulties at the moment, CVAs, takeovers, mergers. There are a lot of high street retail names. Who knows what the next few years brings? We'll probably come on to it shortly in this, but for a lot of reasons that we might come on to, industrial and office are going to be hot